If you deduct the deductions under section 80C to 80U, you'll get some balance. So what is that balance is called? So that balance is called total income. What is the slab rate? Slab rates are the rate of tax we are supposed to impose on certain incomes. What is this casual income? This casual income is nothing but winning from horse race, winning from gambling, winning from card games, winning from lottery. This all kind of incomes comes under casual income. Hello dear students, I am Arun Kumar, lecturer in Department of Commerce and Management, Vidhyaashram First Grade College, the Temple of Excellence, Mysuru. Dear students, welcome to this new session on topic assessment of individual. So in this session, we will be discussing about what is assessment of an individual. If you look into the format, that is the format for computation of total income of an individual. Yes, so what is this total income? Total is nothing but the total of all 5 heads of income. What is this all 5 heads of income? All 5 heads of income is nothing but income from salary, income from house property, income from business and profession, income from capital gain, and income from other sources. So we have 5 heads of income. So these are all the 5 heads of income: salary, house property, business and profession, capital gain, and other sources. So we will be finding out the income under each head, that is salary, house property, business and profession, capital gain, other sources. So after finding out under each head, what we will do? We are going to total. We are going to total the all 5 heads of income. That is called total income of an individual. So how we are supposed to do it? So this is the format. So particulars, amount. So income from salary, first we will consider it. If there is any income earned by the person or by the assessee with respect to income from salary, that we will be considering. Next, income from house property. If any income earned under house property head, then we will be taking it. Next, income from business and profession, income from capital gain, income from other sources. So this 5 heads of income we will consider, and we are going to total it. The total, whatever we will be getting, the total is called what? Gross total income. Yes, the total is called what? Gross total income. So from gross total income, less deduction under section 80C to 80U. Less deduction under section 80C to 80U. Yes, we have certain deductions under section 80C to 80U. For example, LIC premium paid, deposited with PPF, that is Public Provident Fund, or medical insurance premium paid, or donation given to PMNRF, that is Prime Minister National Relief Fund, or donation given to NDF. Okay, so if these kind of expenditures are made or incurred by the assessee, then he can claim the deduction under section 80C to 80U. So from gross total income, if you deduct the deductions under section 80C to 80U, you'll get some balance. So what is that balance is called? So that balance is called total income. That balance is called total income. So it is very easy to find out the total income of an individual. How? Just we are supposed to add all 5 heads of income, that is income from salary, house property, business and profession, capital gain, and other sources. So whatever the total you will get, the total is called gross total income. So from gross total income, less deduction under section 80C to 80U. So if there is any deductions, that is if there is any contribution made by the assessee, then we will be deducting that contributions under section 80C to 80U. Then whatever the balance you will get, that balance is called total income of an individual. Very simple. Next, moving on, computation of tax liability. After finding out the total income of an individual, on that income we are supposed to impose tax. So how we are supposed to calculate the tax? Very easy. So particulars, amount. So tax on casual income. Yes. What is this casual income? This casual income is nothing but winning from horse race, winning from gambling, winning from card games, winning from lottery. This all kind of incomes comes under casual income, and we will be charging 30% of tax on those kind of incomes. How much we will be charging? We will be charging 30% of tax on those kind of incomes. So tax on casual income 30%, we will be considering the amounts in the amount column. Next, tax on unexplained cash credit investments money and expenditure. If assessee have the income which cannot be explained, on that kind of income also we will be charging 30% of tax. Next, long-term capital gain 20%, short-term capital gain 15%, and tax on other taxable incomes. Yes, tax on other taxable incomes. That is, after taxing the casual income and unexplained income, long-term capital gain and short-term capital gain, whatever the balance income you are going to get, on that income you are supposed to apply the slab rate. Okay, you are supposed to apply the slab rate. So after applying the slab rate, total the value, you will get some total. Okay, you will get some total. If the total of the tax payable by an assessee, the total of tax payable by the assessee, if it is less than 5 lakhs, if it is less than 5 lakhs, then you are supposed to give the rebate. So what is this rebate? It's a kind of concession or discount in tax given by the tax authority. So less rebate under section 87A. So if you give the rebate under section 87A, then you will get some balance. That is called total tax. So what is the rebate amount we are supposed to give? It is fixed, that is 12,500. So we will be giving 12,500 of rebate. So after giving the rebate, you will get the balance. Okay. Next, add surcharge if applicable. Next, health and education cess, it's 4%. Next, you will get the total. So that total is called total tax. From total tax, if any advance income tax is paid, deduct it, or if any tax is deducted at source, then deduct it. So then you will get some balance. This balance is called tax payable or tax refundable by the authority. So this is how we are going to compute the tax liability of an individual. It is very easy to find out the tax payable by an individual. By looking at the format, you may feel that it is very difficult to compute. No, it is not at all very difficult to compute. It is very easy to compute the tax liability of an individual. So once we start solving the problem, you will get to know how to solve the problem and how to find out the tax liability of an individual. So before solving the problem, first we have to look into the slab rates. Yes, first we are supposed to look into the slab rate. What is the slab rate? Slab rates are the rate of tax we are supposed to impose on certain incomes. See, in case if the age of the assessee is less than 60 years, if the age of the assessee is less than 60 years, then for him we have a different slab rate. So what is the different slab rate? Up to 2,50,000. Up to 2,50,000. It is nil. You need not to pay tax to the government. If assessee is earning up to 2,50,000 and if his age is less than 60 years, so then he need not to pay tax to the government. Next, 2,50,000 to 5 lakhs. 2,50,000 to 5 lakhs, it is 5%. Yes, if the assessee is earning the income between 2,50,000 to 5 lakh, then the tax applicable is 5%. Next, 5 lakh to 10 lakhs. 5 lakhs to 10 lakhs, it is 20%. It is 20%. Next, above 10 lakhs. Above 10 lakhs, it is 30%. Yes, if the assessee age is less than 60 years, then up to 2,50,000 it is nil, and 2,50,000 to 5 lakh it's 5%, 5 lakh to 10 lakh 20%, and above 10 lakh it is 30%. Next, if the assessee age is between 60 years to 80 years, if the assessee age is between 60 years to 80 years, then it is up to 3 lakh rupees. It is nil. If the assessee age group is between 60 to 80 years, up to 3 lakh rupees, it is nil. Next, 3 lakh to 5 lakh. It is 5%. Next, 5 lakh to 10 lakh. It is 20%. And above 10 lakhs. Above 10 lakhs, it is 30%. So if the assessee age group is between 60 years to 80 years, then up to 3 lakh it is nil, 3 lakh to 5 lakh 5%, 5 lakh to 10 lakh 20%, above 10 lakh it is 30%. And if the age of an assessee is above 80 years, above 80 years. If the assessee age is more than 80 years, those assessees were called super senior citizens. So up to 5 lakhs. Up to 5 lakhs, it is nil. So up to 5 lakh, they need not to pay tax to the government. Next, 5 lakh to 10 lakh. 5 lakh to 10 lakh, they are supposed to pay 20%. Next, above 10 lakh, above 10 lakh, it is 30%. Above 10 lakh is 30%. So if the assessee age is less than 60 years, up to 2 lakh 50, need not to pay tax, it is nil. 2 lakh 50 to 5 lakh 5%, 5 lakh to 10 lakh 20%, above 10 lakh 30%. If the age group is between 60 to 80 years, up to 3 lakh rupees nil, 3 lakh to 5 lakh 5%, 5 lakh to 10 lakh 20%, above 10 lakhs 30%. Next, if the age is above 80 years, up to 5 lakh nil, 5 lakh to 10 lakh 20%, and above 10 lakhs it is 30%. And also higher and secondary education cess, okay, higher and secondary education cess is applicable at 4%. Okay, if surcharge is applicable, then we are supposed to calculate the surcharge at the prescribed rate. So this is the slab rate for the present year. So now moving on to solve the problems based on the computation of total income of an individual. So let us move on to the first problem, that is, from the following particulars of Mr. Lakshmikant, compute the total income for the assessment year 2021-22. Point number 1, gross salary per annum 2,30,000, loss from self-occupied house rupees 20,000, rent from let out house 60,000, interest on loan taken for let out house rupees 45,000, income from textile business rupees 50,000, loss from speculation business 10,000, profit from speculation business 25,000, short term capital loss rupees 20,000, long term capital gain rupees 80,000, interest on bank deposit 16,000, gross winnings from lottery rupees 12,000, donation to NDF 20,000, deposit in PPF rupees 50,000, and Indian agricultural income rupees 15,000, and foreign agricultural income rupees 10,000. So with respect to this information, we are supposed to find out the total income of Mr. Lakshmikant for the assessment year 2021-22. So we all know we have different kinds of incomes, and we all know that which income falls under which head of income. For example, gross salary, where it comes under income from salary. Next, loss from self-occupied house. So self-occupied house, where it comes under house property. Next, income from business, textile business, speculation business, where it comes under income from business head. So that if we know where the particular income comes, under which head of income this particular income comes, then it is very easy to solve the problem. So moving on to the solution part, computation of total income, particulars, amount. So first head of income is what? Income from salary. So do we have income from salary in this problem? Yes, we have salary. Gross salary rupees 2,30,000. So salary rupees 2,30,000. Finished with respect to income from salary. Next, income from house property. First one, what we have? Loss from self-occupied property. Yes, it is given in the problem. Loss from self-occupied property 20,000. So what is the amount? 20,000 we have taken in bracket because it is a loss. Next, let out property. So what is the rent received? Rent received is 60,000, and the municipal tax is not given in this problem. So rent received 60,000, that will be the annual value for us. So less 30% of annual value, that is standard deduction under section 24. So you'll get 18,000. So deduct 18 from 60,000, and also you're supposed to deduct the interest on loan. You're supposed to deduct interest on loan from 60,000. So we have two items to deduct from 60,000, that is 30% of annual value and interest on loan. So take it to outer column. So 60 minus 18 and 45. Still you will get the minus balance of 3,000. So totally how much loss you have under income from house property? You have 23,000 rupees of loss from income from house property. Next, income from business. Yes, income from textile business. What is the amount we have in the problem? Income from textile business 50,000. So income from textile business 50,000. Profit from speculation business 25,000. Loss from speculative business rupees 10,000. So what you will do? You will do set off with respect to this speculative business income. So you are setting off loss from 25,000 of profit. You will get balance of 15,000. So 50,000 income from textile business and 15,000 from speculative business. Altogether business income comes to 65,000. Next, moving on, income from capital gain. So short-term capital loss. So what is the short-term capital loss? We have 20,000 and long-term capital gain we have 80,000. So short-term capital loss 20,000, long-term capital gain 80,000. So if there is any loss with respect to capital gain, you can set off the loss with gain. So if there is any gain with respect to long-term capital gain and short-term capital gain, you can set off the short-term capital loss. So set off this 20,000 from 80,000, you will get balance 60,000. This 60,000 is income from capital gain. So moving on, income from other sources. So interest on bank deposit, it is given in the problem 16,000. Winning from lottery, yes, 12,000. Next, Indian agricultural income, yes, it is exempt from tax. If any agricultural income received in India, if any agricultural income earned in India, it is exempt from tax. Next, foreign agricultural income, yes, it is taxable. So take the amount 10,000. If you total this inner column, you will get 38,000 outer column. So that 38,000 is called what? Income from other sources. So if you total the outer column, from salary, house property, business and profession, capital gain and other sources, you will get 3,93,000 rupees. How much you will get? You will get 3,93,000 rupees. That is called gross total income. Next, from gross total income, less deduction under section 80C to 80U. Yes, we have two deductions under section 80C to 80U. One is donation to NDF and the second one is deposit in PPF. Donation to NDF and deposit in PPF, 20,000 and 70,000. So deduct the deduction under section 80C to 80U. Donation to NDF 20,000, deposit in PPF 50,000, total 70,000. So deduct 70,000 rupees from 3,93,000. You will get some balance. That balance is 3,23,000. That 3,23,000 is called what? Total taxable income. The 3,23,000 is called total taxable income of Mr. Lakshmi Kant. So this is how we are supposed to solve the problem. So we will solve one more problem. Mr. Chiran furnishes the following details for the previous year 2020-21. Salary received from private company 4 lakhs, rent from house property 30,000, municipal tax paid by tenant 3,000 and 3,000 paid by Mr. Chiran. Next, income from business 2,60,000, income from speculative business 20,000, loss from speculative business 25,000, short-term capital gain 8,000, long-term capital gain 25,000, long-term capital loss 5,000, agricultural income from Sri Lanka 10,000. Next, dividend from domestic company, it is 7,000. Winning from lottery, gross value, it is 1 lakh. LIC premium paid 30,000. Donation to NDF 20,000. Medical insurance premium paid rupees 15,000 by check. So compute taxable income for the assessment year 2021-22 of Mr. Chiran. So moving to the solution part, computation of total income, particulars, amount. So income from salary. Do we have any income with respect to salary? Yes, we have 4 lakh rupees. So write down the 4 lakh rupees here. Next, income from house property, seconded. Do we have any income with respect to house property? Yes, we have rent received 30,000 and municipal tax paid by tenant 3 and 3,000 by Mr. Chiran. So always we are supposed to consider the municipal tax paid by the owner, that is by Mr. Chiran. So rent received 30,000 less municipal tax paid by Chiran is rupees 3,000. So deduct the 3,000, you will get balance of 27,000. So on 27,000, compute 30% standard deduction value. So you will get 8,100. So if you deduct 8,100 from 27, the balance you will get is 18,900. So this balance is called income from house property. Moving on, income from business and profession. Business income. So what is the business income given in the problem? It is 2,60,000. So directly take 2,60,000. So income from speculative business 20,000 and loss from speculative business 25,000. You have to set off this. Okay, you have to adjust the income and loss with respect to that particular business. So here income is 20,000 and loss is 25,000. So here we have loss. But in the outer column, you are not supposed to set off this 5,000 with 2,60,000 because speculation business loss you can't set off with the normal business. Okay, speculation business loss you can't set off with the normal business. You have to set off the loss of speculative business with respect to speculative business only. So 2,60,000 directly we are taking to the outer column. We are not setting off this 5,000 with 2,60,000 because 2,60,000 with respect to the normal business and this loss with respect to the speculative business, and we have to set off this 5,000 loss with respect to speculative business only. Income from capital gain. Yes, short-term capital gain. How much we have in the problem? Short-term capital gain, it is 8,000. Yes, we have considered 8,000. Next, long-term capital gain. How much we have in the problem? It is 25,000. Yes, we consider 25,000. And long-term capital loss, we have 5,000. So we have taken 5,000 here. So here 8,000 plus 25,000, it comes to around 33,000. So minus 5,000 of loss. Set off the loss. You will get balance 28,000. This 28,000 is called what? Income from capital gain. So moving on, income from other sources. Agriculture income from Sri Lanka, yes, 10,000. Next, dividend from domestic company, yes, 7,000. Winning from lottery, yes, 1 lakh. So totally you will get 1,17,000. This is called income from other sources. So total the outer column. Total the outer column. Salary income, house property income, business income, capital gain income and other sources income. Totally you will get 8,23,900. That value is called gross total income. So from gross total income less deduction under section 80C to 80U. So LIC premium paid, it is given in the problem 30,000. Next donation to NDF, it is given in the problem rupees 20,000. Next medical insurance premium, it is given in the problem 15,000. So total the value you will get 65,000. So deduct the 65,000 from 8,23,900. You will get 7,58,900. You will get 7,58,900. This value is called total taxable income. So this is how we are supposed to calculate the total income of an individual. So I hope all of you understood what I explained in today's session. So we will meet with some more problems in the upcoming session. Until then, thank you all.